let's start, if I may, by setting the scene. ISSB is another acronym in the verbiage of ESG professionals. And for the uninitiated, I've made sure I got it right, it's the International Sustainability Standards Board, right? And just a bit of history, it was created or launched by the IFRS Foundation at COP26. 2 years later, there was the IFRS S1 standard, which is sustainability, general sustainability disclosures. S2 at the same time was climate-related disclosures. And then 2 years after that, April of this year, there was a proposal for amending the S2. There's a 60-day comment period, and that ends tomorrow. So this conversation is very timely. That's a whistle-stop tour. Did I miss anything?
There's lots of other details, but that's a pretty good start.
Those are the highlights. Okay. Now, I said this is a timely conversation. Actually, we were just discussing there's some news out of the UK and GRI, both very recent, hot off the press. Could you tell us briefly about them and why they're significant?
Sure. So thanks, firstly, for having me. And I think just to set the scene, maybe before I talk about the UK, I think the other important data points and to build on your story are the rate of regulatory adoption of the standards around the world. So since we published our standards 2 years ago and since we've been in existence for 3 years, we've now got more than 36 jurisdictions around the world who have either decided or are in the process of deciding to use our standards, and they represent more than 50% of global GDP and more than 50% of global greenhouse gas emissions. So we're now well on the journey to actually having this reporting on sustainability, including climate, mandated around the world to make sure investors have got comparable high-quality information. So within that context, one of the 36 jurisdictions is the UK, which is obviously an incredibly important capital market in the global stratosphere. And so yesterday they launched their consultation. So this follows a process that's been undertaken in the UK where a technical group has gone through S1 and S2 to make a recommendation on whether they felt that they should be applied in the UK as the basis for sustainability reporting. They've recommended that they are applied in the UK with alignment with our S1 and S2 standards. And yesterday the consultation was opened to enable UK stakeholders and global investors to comment on whether they agree with that recommendation. Right. So a really important moment to move UK further down the path of regulatory reporting. The other thing that you mentioned, which is an important announcement actually hot off the press just this morning, is as the Global Reporting Initiative, as the global standard setter for impact reporting, set out today their updated standards on climate reporting, we're really pleased to announce that GRI has agreed that they will accept disclosures on emissions prepared using our S2 standard as being other disclosures which are necessary to meet their impact disclosures on emissions. That's a lot of words. What does that mean? It means that if you're a company that's using S2 and you also want to report to stakeholders beyond investors using GRI, great news, you only have to prepare your disclosures on greenhouse gas emissions once using the ISSB standards, and you can use those disclosures to comply with the GRI standards. And for those of you who know about calculating greenhouse gas emissions measurement, including Scope 3, that's not an easy thing to do. So being able to do that once and meet 2 sets of requirements at once is a huge, huge win for the market, and we're really excited with that announcement today.
Great, thank you. Well, I'm keen to ask you about S2, but I'd like to say at this point that we will make some space for audience questions. So if you have some, please submit them through the app. Okay, S2 is the climate piece. As I mentioned, we're coming to the end of a sort of a 60-day review period. But I want to ask you, I guess, what's the purpose of this revision? And should it be concerning at all that it's only 2 years since it was launched, that it now needs amending?
I think quite the opposite.
How come?
Yeah, I'll explain.
Please.
So when we announced the new standards, S1 and S2, we did that knowing that this was an enormous change in reporting for everybody around the world. So many are used to doing sustainability reporting, but not necessarily for capital markets, not subject to regulation, not subject to assurance, and not where we ask for things like information on climate to be linked to information in the financial statements. It's a whole new level of seriousness. And so one of the commitments that we made as a board when we issued our new standards was that we stood ready as our #1 priority to provide the market with the support they need to get on with this journey to apply our standards and to apply them well. So we said from the start, if you've got questions or concerns, Here on our website, you can submit questions and we'll take action if we think we need to. As a result of what we've heard in the market, we've issued a lot of educational materials where we haven't made changes to the standards, but where, for example, we've explained how to provide information about greenhouse gas emissions using the Greenhouse Gas Protocol in a way that's compliant with S2, because we heard lots of questions about that. But then we heard some questions about some application challenges that we hadn't been aware of at the time that we published S2. So as a sort of grown-up responsible standard setter, we have decided that it's appropriate to make targeted amendments as long as they don't unduly disrupt those who are busy implementing the standard, if we think we can provide targeted relief in a way that really won't upset the quality of the information provided to investors. So we took the hard decision as a board to propose making some targeted amendments to a very new standard because we had said we would be there to help if we needed to. So I'll give you a couple of examples of what's in this exposure draft. They're very targeted amendments. So for example, in S2, we ask for calculations of greenhouse gas emissions, and we had mandated the global warming potential figure you need to use to do that calculation. We said it needed to be the latest figure produced by the IPCC. What we've realised as we've started talking to jurisdictions is that many of them ask companies to calculate their emissions for other purposes, and they don't always use such an up-to-date global warming potential factor. So we're proposing that if you're in a jurisdiction where you'd have to do a calculation using a different figure, we'll let you to use that figure to comply with S2 to provide a cost relief, because we didn't think it was a big disadvantage for investors. So it's very targeted, hopefully you can see from that. The one that's grabbed more attention, I think, which is why you're asking me the question, is that one of the clarifications that we've proposed in S2 is around which category 15 scope 3 emissions you have to provide disclosures about. So which emissions on your loan book or your underwriting activity or your insurance-based emissions if you're an insurer do you have to provide scope 3 emissions calculations for? Not an easy calculation to undertake. Now, when we finalised S2, our intention was that we would only require disclosure of emissions for loan books and investments, not for facilitated emissions, your underwriting activities, and not for your insurance-based emissions, because at the time we made that decision back in 2022, our assessment was that the measurement methodology and attribution thinking behind that was still being developed. It's relevant and useful information, but measurement was nascent for those categories. And at the back of the standard, you can see clearly that was our intention, but unfortunately, and I'll take ownership of that, at the front of the standard it wasn't totally clear whether that was the intention or not. And so we got the question, do I read the back of the standard or the front of the standard? Do I have to do this calculation or not? So to take away that confusion, we've really proposed to clarify the standard to say, this is what the intention was when we drafted, so you don't have to have a long conversation with your auditor about whether you have to provide this number or not. We're just clear it's not required. You could do it if you wanted to, certainly relevant information, but if there's another way to provide information about your transition risk on your insurance business, etc., you can use a different piece of information. So it's a clarification. It's there to help.
Great. Well, I'm glad you got to the facilitated emissions piece, because that, as a financial journalist covering banks, I'm particularly interested in that piece, and the sort of the finance versus facilitated is a very interesting discussion that we don't really have time for. But on the facilitated piece, which is basically the emissions enabled by your
underwriting,
your capital markets activity, there's always been a sort of philosophical discussion about, do these emissions really belong to me? Should they be attributed to me or not? And there was, my colleagues and I, we followed the development of the PCAF standard on facilitated emissions, and there was a lot of debate about what should the number be. Should it be 33%, 100%? Should it exist at all? But some banks, HSBC, Citigroup, I think Goldman, but I need to check that, they do publish facilitated emissions numbers. So should one take away from the review that is not useful information, or it's irrelevant to the market?
No.
Or more that it's just at your own discretion whether you think it's of value?
It's certainly not a judgment on the relevance or the decision usefulness of the information. at the time that we made the decision back in 2022, what we were being really careful with in the standards, again going back to my sort of earlier comment that this is a huge change in reporting, we're trying to get the balance right between our ambition and what's practical and pragmatic and realistic for people to do. And so at that moment in time, we felt that given all of these conversations that you're alluding to about what the sort of philosophy is behind facilitated emissions, how should you do these attributions, are they really your responsibility or not, that it was a little bit early. Now, that's not at all suggesting that this isn't relevant information, and certainly we'd be delighted if those who have started with those disclosures were to include them as part of the S2 disclosure that they use. I think the important point is that the sort of starting ask in S2 is provide the information which is useful for investors to understand your transition risks. You still have to do that. That hasn't been changed by these proposed amendments. All we've taken away is the very specific ask that you must include as a piece of that information, the information on facilitated emissions. But you need to still meet that need. Somehow you need to explain your transition risk, and you might choose that facilitated emission disclosure is still the best way to do that, but we're not saying that's the way you have to do it. That's how I would position it.
Some people also say financed emissions are not very useful for getting a view on transition risk either.
They do, and I would say that they are quite a blunt tool because it's a very, absolute measure and I've said publicly before, if I was a bank, I'd probably want to provide extra colour about, okay, which parts of the business am I lending to? Do I have conversations with this counterparty about their transition plans and their ways that they're reducing emissions and what their strategy is? Do I attach conditions to my borrowing? Am I having those conversations with management? I'd probably want to provide that colour, but it is still something which is a proxy for transition risk. If you are lending to these types of industries, how are you managing the credit risk exposure that might come from the physical risks or the transition risks the real economy is facing? And how might a regulator respond to that over time? We're trying to get a picture of that, and it's a proxy. It's not a perfect measure, but it's a proxy for transition risk, and so that's why it's there in the standard.
Okay. A common thread through all the conversations this morning and throughout all the events I've been to at Climate Week is sort of the geopolitical divergence, you could call it, the US heading in one direction and Europe in the other. And in the early days of ISSB, and I'll be interested if you still use this language, there was a lot of talk about sort of creating a global baseline for sustainability disclosures and a kind of a common language that could be used by all. Given the sort of, how can we put it nicely, the sort of the obliteration of climate policy in the US and the European omnibus process, should we kind of be kiss goodbye that idea for good? Is that long gone? And if so, like, what's the consequence of that?
I certainly haven't kissed goodbye to that ambition, and I use the term global baseline in every second sentence, so it's still a thing.
Okay.
And I think what's really important, if you think back to that moment that you referred to at COP in Glasgow when we announced that the ISSB would be created, that was driven by a demand from investors in particular for information to enable them to feel confident that they could assess how climate risks and opportunities, but other sustainability risks and opportunities as well, might affect the trajectory and the performance and the prospects of a company over the short, medium and the long term. And also because companies need to attract capital to do things that they want to do in response to those risks and opportunities. And there was patchy reporting, it wasn't comparable reporting, and so people said, can you please help to make this a more efficient and effective system to underpin the efficiency of capital markets? And that need from investors has not gone away. That need doesn't go away because of changes in politics. And we still see very vocally bodies like PRI just last week talking to the Korean Sustainability Standards Board, it's on their LinkedIn posts, telling them that they should stay with the ISSB's global baseline. We still see the likes of Neuberger Berman, Norges Investment Bank and CalPERS publicly supporting the ISSB's global baseline as part of the EU omnibus decisions, because investors still need to understand how companies are governing, what their strategy is, how they're managing these risks, how are they going to deal with physical climate risk,
right,
let alone the transition requirements that they might have. And those needs haven't gone away. And also, companies, when we talk to them, also understand, at least well-governed companies, understand they need to be on top of these risks and finding opportunities to have a sustainable business in the long term. So there's an interest in understanding these risks and opportunities from a business perspective. And often when I'm out talking to companies, they note that they've learned things about their businesses when they're applying our standards. So I think that investor need, that corporate interest, and backed by an efficient reporting system, that hasn't gone away.
Okay. The need hasn't gone away, and the underlying issues haven't gone away, but it does seem that the climate, to use that pun, in which we operate has changed a lot, right? And I just wonder if, the US retrenchment on climate and DEI and other topics just has lasting pernicious, you could say, or certainly if you care about these issues, knock-on effects on sustainability reporting and these topics around the world.
It would be easier if it wasn't the environment, let me be honest.
Yeah.
But I think what it does mean is that we have to be really careful as a standard setter to ensure that what we ask for is really decision useful. It's really valuable for businesses. It's really valuable for investors. And if that market need and efficiency is there, I think that can underpin a global baseline. It's away from policy and politics and sort of fashion. I think that it increases the need for that efficiency aspect.
Okay. And one question about the ISSB itself. In this sort of multipolar world where we have different jurisdictions going in different directions, I understand that you're still sort of pushing and pulling for this global baseline. But how does the ISSB remain relevant in a world where it's the foundations on which it exists would be loathed in some places, or at least not welcomed?
Well, I think capital markets are global. And so this need for a common set of information and the ability to compare and decide whether you want to invest in a company in the UK, Japan, China, Canada, Singapore, Australia, Nigeria, that exists irrespective of politics. And so I think that underpinning is still there, and that's why there's still a demand for the work that we do. So as long as we keep that look at efficiency, and I think as long as we're really careful to be policy neutral, which we are, we just say, just tell us how it is. We're not judging whether you're good, whether you're bad. That's for others to think about. Just tell us what it is. And I really think that we can see that policy neutral, efficient focus that meets investor needs is holding true.
Let me ask you just one last question. The previous panel, the one before Eric, was about 1.5. And obviously that's a critical discussion that is taking place in all kinds of fora. What's the relevance of sort of the world's trajectory for 1.5 for the ISSB's sort of standards and disclosures?
Well, to the extent that companies are planning to reduce emissions and targeting 1.5 or whatever their version is, our disclosures help investors and companies communicate and understand how a company's plans will reduce emissions, enable investors to ask the questions about how successful they are in achieving those targets, and assess performance over time. And actually, we've got negative minutes left, but one of the important things that we published this week actually at London Climate Action Week was new guidance on good disclosures about companies' plans, both to reduce emissions but also to adapt to climate change for resilience, and that information to inform investment decisions, to make sure that banks and others have got the information they need to understand climate transition, including how well we're doing collectively on that ambition, is underpinned by that sort of disclosure.